is Scott Wohlers with River Place Capital. It is Thursday, May the 7th, and wow, have we seen after a historic month of performance in the markets that we haven't seen since over 30 years. We sold off pretty hard on May 1st last Friday off of the great performance that we saw in the month of April. Now, we continue to see some bounce back this week from the sell-off on Friday, and we are moving higher. And believe it or not, as of right now, the Nasdaq 1,000 is now actually positive year to date. It's hard to believe that just a month ago we were 30% off of our highs, and it was looking rough, and now we're all the way back up on the Nasdaq to break even for the year. And so one of the questions that was posed to me by a dear friend, and I thought it applied great for what we'd be talking about today, is with all of the economic data that's coming out currently that is so negative, why are the markets reacting so positively or are at the higher end of their trading range that we've talked about being in until we have a real therapy and a proven treatment that works, and a vaccine, and we can really reopen and be wide open as an economy? Well, there's a couple reasons for that. Number one, the market is a forward-looking aspect. So for example, today you saw 3.3 million new unemployment claims, for initial unemployment claims, filed today. However, the number continues to get smaller, even though that's a big number, meaning hopefully the peak of unemployment has passed. We are going to have a jobs report tomorrow, and more than likely it's going to be a historically bad number, but the markets have already expect that and have already priced that into the market. And so what the markets are doing is they're really betting on and looking for how are we going to do in 3, 6, 9 months. And the bet right now in the stock market is that we are going to reopen sooner rather than later. We are going to go back to a sense of normalcy sooner rather than later. The consumer's going to go back to spending, and the economy is going to start to pick back up and recover more quickly than some may be thinking and economists may be predicting. The other phase and the other reason why the markets are acting so great is the amount of liquidity that's in the system. The Federal Reserve alone in the United States has pumped in $3 trillion worth of liquidity into the system. And that money has to go somewhere. And so where it's going is it's going into our treasuries, going some into gold, but it's also going into our stock market. And it's buying those companies in the market, and especially the ones that are beneficiaries of a stay-at-home economy. And so you're really seeing a few leadership names lead these indexes higher, whether they're big tech giants or things along those lines that are deemed and are benefiting from everybody staying at home. But on the other side too is we are also seeing a lot of international money where the US is deemed a safe haven for the world. So you have central banks all over the world pumping liquidity into systems, and that money is going somewhere, and it's coming here to us as the U.S. and especially into the S&P 500 is seen as a world kind of safe haven. And the bet is that the United States economy is going to get up and get going quicker than anywhere else around the globe. So that's why, as we're getting these really awful data today, that the markets are at the levels that they're at today. So I hope that explains everything. Of course, if any time you have any questions, feel free to always reach out and give us a call. You can reach us at 904-346-3460, and always check us out online at www.riverplacecapital.com. I hope everybody has a wonderful rest of the week. Thanks.